Hello and good morning, everybody. You're with Martin Panev, Chief Account Executive Trading Analyst, GDMFX. Welcome to today's European session market outlook. Starting with a quick cover on what happened yesterday. U.S. markets, the Nasdaq has shown a fairly good bear and bull fight yesterday, but the bulls prevailed in the end, as per the positive unemployment data and the strength of the ICE index. As we have mentioned, it had found support with the 50-day moving average, which he managed to somehow pierce here the other day. And so we're looking at a correction to the upside for the short-term trading. The Dow and the S&P 500 are showing absolutely the same outlook, with bulls taking charge in the short term. Basically, today we are expecting huge market movers from the calendar. Unemployment, non-farm payrolls, earnings, and services PMI is what we're expecting today, as well as the U.S. trade balance, non-manufacturing PMI as well. So I would advise day traders to be a bit more cautious. We all know that this is the day we all wait for, in order to try and correct previous mistakes or add to our return on investment. So be careful. Moving on to European markets, the DAX has kept the declining price trend over the last 5 days, reaching 500 points loss. Along with the French CAC 40 with another 200 points range, showing same positiveness today, but the general trend is down. Bank holiday in Germany, by the way. Today the markets are closed. The euro is trying to get some momentum after the interest rates remain the same, and a little positiveness in the PMI monthly index, while a decline on the year-to-year basis has stopped it from undertaking its major U.S. rival. It did hit the Great British Pound a bit and the yen, and then it started to retreat back. The British FTSE has suffered a massive hit, over 100 points yesterday, to the downside, even though the latest general reports confirmed that the British economy, out of the 8 leading world economies, is doing great, actually better than the rest, and is showing the most steady growth. Today, we are expecting the reports on the services. Also, the currency has taken hits all over its major rivals yesterday. Services PMI, although all through the European area and Britain, and also retail sales are the key movers for the European currencies today, as well as the pound. Asian markets, markets in Asia are all adding to their losses as per the tensions in Hong Kong and the stress on the major Asian currencies. A gouge of China's non-manufacturing industries declined to an 8th-month low in September, adding pressure to the government to step up stimulus to counter a property downturn. The non-manufacturing purchasing managers index dropped to 54 points from 54.4 in August. In summary, we're looking at the dollar adding power. The greenback is getting close to its 4-year high, and we are looking at quite volatile day for the euro and the USD in the afternoon. Just a quick hint on major commodities, gold and oil. The gold fell to extend a weekly drop as investors assessed prospects for higher U.S. interest rates before the world's biggest economy reports monthly payrolls today. I'm not going to go into more details on that. The trend is to the downside still. We are looking at short positions on the short trend. The oil headed for the biggest weekly drop in a month. After a big drop yesterday, the selling pressure might be over. However, the price is still within the downtrend channel. Our technical indicators are pointing that we are most probably looking at a sideways movement. So the recommendation is to take a look in the calendar, take a look in the charts, and stay neutral until you see a confirmation for a good entry point. That was all from me from today. Thank you very much for your time. Cheers. Bye-bye.